Hey yo, what's up people? Right, is Mr. TCee from Set Fair Traders. So in today's video, I'm back again with a $3 account, and this episode is different because I'm gonna be trading currencies. I don't remember the last time I posted a video trading the current space, and in today's episode, I decided to trade them because of various reasons. The synthetic indices has been not moving well on the past few weeks, so I had no choice but to trade the currencies, right? So this is a $3 account, and I'm trying to flip it to. I don't know how much I'm gonna make. Just watch the video till the end, okay? So without wasting much time, I aligned my trend line connecting the inner peaks, okay? And then after that, I identified my reversal pattern, okay? So from this analysis, you can actually see that nothing changed. Everything is still the same process, same analysis, same approach, but different pair. So according to my trading style, risk management is a must every time when I'm executing, right? And I think 3 position will be enough for a $3.01 account. So I'm gonna add another to make them 3, right? The analysis is perfect. You can see that they are rejection candlestick, and those candlesticks with a long tail is a sign that the market have reached a resistance and then is failing to break above that zone. So no other way, CAD will be forced to go down.
A few moments later.
So this is exactly what happened on CAD after holding it for about 3 hours, right? 3 good hours, and there was a huge drop, and right now we are in day profits. So for someone who stopped trading currencies a while ago, I can see that the scale is still there, okay? The scale is still there. So right now you can check the risk to reward ratio. You can see how the setup was how the setup was respected. Everything is clear and everything is transparent. So in other ways, I can say this thing respect price action well, okay? So I wish I started trading currencies a while ago, but it's not a big deal. It's never too late. We are still cruising nicely. You can actually see that the deposit was $3.71, and right now the balance is on $9.09. So there's floating profit of about $5.30, which is not bad for a small account. And I guess right now is the right time to close this trade. It seems like it's now retracing, so I'm closing with $1.21. So on the next day, same pair, CAD I saw another opportunity, and it seems like CAD respect BOR well, okay? So this is a symbol, price action movement, impulse move, retracement, impulse move, retracement. So on the current market price right now, there was a retracement, and it seems like it's now making an impulse move, so you have to take advantage of that move, okay? So I took my sell, I ended my position, and since the account is already up on $8.21, I ended a few position. Remember, risk management is a must every time when I'm about to take a trade. So I had to make sure that my risk management is where I ended about 5%, and I used a margin of about $3, and the free margin right now is $4. Which means that on each position I'll be risking something like $1 plus, okay? I'm done with my part. It's now time to leave the rest to how the market is going to react to the way I've analyzed.
A few moments later.
So about 23 hours later, CAD made a huge drop, and it went all the way down. And right now, each position is in deep profits, okay? Each position in deep profits. So besides that impulse move retracement, you can actually see there was a reversal pattern on 1 hour time frame. You can see this clearly if you are using a laptop. Now that I've reached my target, it's time to close, and I close with $12.74, and right now the balance, the total account is on $20.84. You know, on the next day, you can actually see that when I was doing the analysis, I came across this flag, and it's a New Zealand dollar versus US dollar pair, right? And this one looks like a flag, and the flag is a continuation pattern. So in this case, we can actually see that the market has reached the lower trend line, which is the support, and we all know what to do when the market reaches a support level. Okay, and besides that, if we switch to smaller time frame, you'll find out that there is a triangle, and remember, a triangle appears when the market is about to change direction from downtrend to uptrend. Okay, so without wasting much time, I took my bias and with 10 position.
A few moments later.
So after taking NZD USD trade, I closed my MT5 for about 24 hours, and then the next day around same time, that's when I checked, and I was like, boom, the trade went exactly into profit. So this is how it's respected my analysis. Okay, this is how it respected my analysis. So you can actually see that this ascending and descending triangle works. It's only that you have to know how to properly apply them, right? So right now I am in floating profit of about $40, and right now the equity is on $60, which is not bad. Okay, and at this point I don't see any reason for me to keep on holding, so I closed with $40, and right now the equity is on $61.21. Okay, there's progress. Remember, I started on $3.71, and right now it's on $61, and the account is slowly growing progress. Okay, and on the next trade, as I was doing the analysis, I came across GBP CHF, and it seems like there's a flag. Now, there's a type of the pattern which I usually trade, and it seems like the market respect them more frequently than other patterns. You can actually see that on the upper trend line, the market was bouncing every time it reaches the upper trend line. So this was an obvious sell. Okay, we already know that as soon as the market reaches a upper trend line, is going to bounce, and at the same time on the upper trend line there is another peak which is on the previous history, which makes it a double top, and we all know that what happens when the market reaches a level of the previous zone, making a reversal pattern which is a double top. That's a sign for the market to change direction from uptrend to downtrend. So without wasting much time, I did the analysis, and then I managed to see where I was gonna put the stop loss, and I took my sell trades. Okay, and on this one I took 10 positions. And you remember, I'm using smallest lot size. You know, I always emphasize on risk management is a must. Okay, especially if the account is still below $100, risk management is a must. So in a scenario that the market went against me, I'm risking maybe $1 on each position, which means of all the 10 trades I'll be risking something like $10, which is not bad. Okay, remember, I want to do a risk to reward ratio of 1:3, which means if I can risk $1, which means I'm targeting $3. Okay, that makes my take profit $30.
A few moments later.
So this trade was very risky. As soon as I entered, the market went against $50 negative. I almost blew the account, but then the ending is awesome. Right now I am in floating profit of 190 plus, which is not bad. So I want you to say the risk to reward ratio, never risk more than what you are targeting. Okay, that's my number one rule. Every time when I'm about to take a trade, I will never risk more than what I'm targeting. I would rather let that account blow than taking less than what I have risked. Now that I've reached my target, no need for me to keep on holding. I'm going to close with $193, and the reason why I close is because of the lower trend line. You can actually see that on the lower side the market have reached a support zone, which is the third touch of the trend line. So on the next day, I jumped on CAD-JPY, which simply means Canadian dollar versus Japanese yen. And as you can see on CAD-JPY, there is a double bottom, and this type of double bottom is a little bit complicated trading it, because the first leg is slightly below the second leg. Okay, only those we have mastered the concept of reversal pattern can be able to trade this type of pattern. Okay, so as you can see, this was the price movement, and right here, this is what is happening on the current price, and I'm anticipating the market to move all the way up. Okay, so you can check the risk to reward ratio is perfect. It's something like 1:3, right? So without wasting much time, I ended my buys, and I want to take about 10 buys. Okay, and let's just wait and see how the market is gonna react to the setup, but hopefully it's gonna go all the way up. Step or setup really disappoint. So right here on my account, I've got $254.50, and I'm willing to risk something like $50. So which means on each position I'm putting a stop loss of $5. Okay, which means that if I risk $50, I'm targeting $100+. Okay.
A few moments later.
So about 10 hours later, this is how the market moved. Right now the trade is in a profit of $78, and it's promising to keep on buying, but the challenge is the market has reached a certain level of resistance, and this level, it seems like it's failing to break above it, because it has been consolidating. But let's just be patient a little bit. So that was my TP1, and then the TP2, the TP3. Okay, because right now I have a risk to reward ratio of about 1:1. Okay, 1:1. And now that I'm feeling to my emotions, I guess it's now time to close this trade with $83. Okay, it's not that much, but it's better to close with something than to close with loss. Okay, so I closed with $337 profit. Okay, which is not bad. Okay, it's from $3.71 to $337. And as we are speaking right now, I've got a running trade of USD CHF, and it's in a loss of $2, but hopefully by tomorrow it will be in profit. Okay, because this position is on -2, which means that I'm holding something like $20 loss. Okay, so far the account is on 337. I will update you the progress on the next episode. Let's hope you subscribe and click that notification bell icon.